Simona, the numbers trickling out right now so far. What do you make of the weakness?
So we were already biased to the downside because there was a big miss or big disappointment on vehicle sales. So I think that put us in a weak position to begin with. And that was confirmed in today's numbers. But I would also say that we are coming off a very strong month in March. And there's been a lot of volatility in retail sales lately, starting with that very weak December number. So it's a bit hard to really make a whole story around one data point. Fundamentally, at this point in time, I would argue that the U.S. consumer is in a good shape. The labor market is strong, incomes are strong, debt service ratios are at multi-decade lows. So there should be some resilience there in the system, but you can't count on every monthly print being exactly in line with expectations.
Well, fair point, and we are seeing that retail sales backing out auto and gas down 0.2%. But I should point out that for April, all the numbers were revised slightly higher. But nevertheless, how much of this will you sort of chalk up to any kind of lumpy buying? And if you smooth it out going forward, what's your forecast for the consumer?
Well, that forecast rests on some assumptions that I think we need to be straightforward about, and we are very concerned at the moment about the impact of broad-based tariffs. I think ultimately supply chains can adjust to some extent, and they will adjust. Experience has shown that as long as there is an alternative lower-cost producer, things don't have to deteriorate too much in terms of the actual price paid by consumers, but that's a huge risk on the horizon. Absent that, however, I'm quite confident that we can see a more positive or stronger contribution from household consumption in the second quarter and beyond than what we've seen in the first quarter.